Guys, so welcome back to another episode of Everything Business, right? Today we are going to continue. In my last video we looked at this um income statement, right? We ensure that the income statement was done correctly, right? And I told you that the textbook that I used is in the description, and again it is in the description, right? So I reminded you that you need to remember the principles of adjusting the income statement. And so this was the solution for this question as it relates to the income statement or the adjusted income statement. So let us look at now the adjusted balance sheet. So let's do this very quickly. All right. So some of the things that you need to remember is that when you are doing the adjusted income statement, the adjustment doesn't really take effect, right? It doesn't really take effect until after you pass the gross profit. And that is one of the things that you need to remember very keenly, right? When you pass the gross profit, that is when the adjustments begin to take effect, all right? So that is one important thing for you to remember, all right? Now we are going to go into the balance sheet. The balance sheet pretty much looks similar, right? It looks pretty similar in terms of how you would draw it up, right? So you would have your three columns just the same, right? Just like this. You have your three columns, right? You want to ensure that the columns are named. And if you remember in my last upload, right, I told you that the naming of the columns is really just for the sake of your fixed assets, right? So that's really what the naming of the columns are for. All right, so we are about ready now to begin with our balance sheet. All right, so let us go with our balance sheet. First thing we have to do is we have to have our name, right? So let's go. Patrick's balance sheet, or you can say statement of financial position as at, and in this question it is the 31st of August 2018, right? The balance sheet would normally have the columns. An adjusted balance sheet would have the columns. So let's put information here: cost, depreciation, net book value, right? And as I said before, these are just for the sake of the fixed assets, all right? All right. Right, so here now we will begin with our heading, fixed assets. Now, if you look in the trial balance, you will look for your fixed assets. Can we identify any fixed assets? Yes, we can. We used them last time, right? Our fixtures and fittings, and we used our vehicles. So we would list the most permanent first, right? So the most permanent, right, depending on how you would want to think about it, right, it would be our fixtures and fittings. Cost for fixtures and fittings, 45,000. Depreciation, and this is important now, guys. So this is where we have to pause, because the depreciation that we're going to use, it must be calculated. So the depreciation is going to be the depreciation that is shown in the footnote, right? and the depreciation that is shown in the trial balance. So the depreciation that is in the trial balance is 27,000, and this depreciation is what we call the accumulated depreciation. The depreciation that is shown in the footnote, when we worked it out, if you look back in your income statement for fixtures and fitting, it will be 9,000. So it will be 9,000 plus this depreciation that is there, which is 27,000. 27,000. So that would be 36,000. So the depreciation that we would use in the balance sheet for fixtures and fitting is 36,000. All right. And now we'll find the difference between both of them. So 36,000 minus 45,000 would give us $9,000. So the net book value for the fixtures and fittings would be $9,000. We will do the similar thing for vehicles. So vehicles, the cost for vehicles was $80,000. Right. The depreciation, we will do the same. We would calculate, we would add. So the provision for depreciation is 48,000 plus the depreciation that we calculated in the footnote. This is the depreciation that we calculated in the footnote, 7,000, right? So we're going to add them, 48,250, 48,250 plus 7,938. That would give us 56,188. That is what we're going to use in the balance sheet. So 56,188. And then we do the subtraction now, right? So 56,188 minus 80,000 equal 23,810. All right. All of these figures, we would add this. This would be 125,000. This figure here would now be 36,000 plus 56, 188, 92,188. Now this would be 9,000 plus 23, 810, 32, 810. These figures, we're not going to use these anymore, so we're going to double line them, or we can just underline them one time. All right. So now we move to our next heading, current assets. All right. We start with our closing stock. Our closing stock figure, right, was $58,384. $58,384. Right. And we're going to have our debtors, or they call them accounts receivable. All right. So the accounts receivables, it was what? 18,360. 18,360. And you may be wondering, why did I put it there? Right? It's because it needs to be adjusted. So provision for bad debt must be subtracted from it. The provision for bad debt, we had calculated that, and we can look back in our footnote and also in our income statement. The provision for bad debt, it was what, $918. And because we don't have any provision for bad debt already in the trial balance, we don't add that to anything. If we had provision for bad debt in the trial balance, we would have added that $918 to whatever figure would have been in the trial balance. All right. And then we subtract it. So we're going to go to a calculator. 18,360 minus 918 give us 17,442. This is all right. So now we can move on. Right. Now, if you remember from my last video on adjusting the balance sheet, right, we have to now adjust. We have to ensure now that we have some information here. So what we are going to be putting here is really prepaid expenses, right? So you have a prepaid expenses, right? We have two of them. We have insurance, which is $275, plus electricity, which is 446. We add those. The calculator's out. 375 plus 446, 821. We don't have any accrued revenue, right? We don't have any accrued revenue, so we wouldn't put that here. We move on to bank. What is the bank balance? Cash at bank, 9,872. 9,872. We have any cash in hand? There is no cash in hand, so we will just have to close it off right here. Get our calculators out again. So that is 821 plus 9,872 plus 58,284 plus 17,442. That gives us 86,519. 86,519. All right. And so now we will move to our next heading, which is less current liabilities. So we're going to look in our question now to see if we have any current liabilities, right? So right off the bat, we see that we have our creditors, or we call it accounts, payables, and that amount to 22,373. But we also have accrued expenses, right? Wages and salaries. It is 2,970. So it's only one. 2,970. Do we have any other liability? For example, a short-term loan. You look in it, you look in there. You don't see any short-term loan, right? No, don't see any short-term loan. So that's it, basically. So we're going to add these figures. Go to your calculator. 22,373 plus 2,970. That gives us a total of 25,343. That we're going to now subtract from this to get our working capital. $61,000. So our working capital is 61,176. That is our working capital, right? So working we're going to add our working capital now to we're adding our working capital to our total fixed asset 32,810 equal 93,986. 93,986. And this is our first double line figure. So we are going to double line it. All right, so we move on now to our final heading, which is called financed by. So it is our business is financed by capital. So our capital there. So we look for capital. Capital is what? 72,933. 72,934 rather. 72,934. All right. We're gonna add our net profit. You say, sir, where do we get net profit from? We get net profit from up here. 65,536. 65,536. 65,536 is our net profit. We add it. Go to calculator. So it is 72,934 plus 65,536. That gives us 138,470. Then we're going to subtract or less our drawings. Now, the drawings figure is 44,482. 44,482. So we have a case where we have 93,988. So we would be off by $2, right? We would have to search where that $2 would come from, but I have a feeling I know where that $2 came from, right? I think I know where that $2 came from. If you remember in my previous upload, right, I had, when calculating this figure, right, I had gotten 7,937, right, point 0.5, I think, right? And I had rounded it up. So that is where that $2 would have come from. Because if you look at it, right, let's do the calculation again. 80,000 minus 48,250, right, would be equal to 31,750 multiplied by 0.25. See, right? So it is 7,937.5, and I round it up, right? So that is where that miscalculation would have come from, right? So it is off by $2. When in an exam situation, when you see this happening, right, you do not need to worry much about it, right? Because you're getting marks for the steps, all right? But that's basically how you would do the balance sheet, right? You don't have time to spend to go back through to find what your errors were. You get what I'm saying? So you don't have time to go back and check that, right? Because you just don't have the time for that. So this is pretty good. This is pretty fine, right? Let me know in the comment section where you think I made the error to get that figure there, right? To be off by $2. So let me know, right? I'll see you in the next one. All right.